Hello and welcome to Advanced Charting Techniques, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. Joined out there in the chat by my good friend Kevin Horner, 30 plus year veteran of the financial markets and a great technician in his own right. Glad to have Kevin there. I'm sitting in today for our good friend Rachel Deshelle, who's again a bit under the weather today. So I have the great opportunity to step into this particular webcast, and I'm excited about this webcast specifically. Not that I'm not excited about teaching every webcast that I teach, but I'm excited about this one specifically, not only because all of you are here with us, but because this allows me to address some of the questions. Yeah, I know you would be, Greg. This allows me to address some of the questions that come up on a fairly regular basis. Now, some of you know, and some of you have actually been there. Some of you have been in this particular webcast, have seen me drop in from some of these events. I teach, along with Kevin, along with Rachel, our live events. And when we're doing our technical analysis and options strategies live events out on the road, oftentimes on Friday afternoons, we'll drop into this particular class and use this as an example for all of those attendees in the room to be able to get an experience of what a webcast, an education webcast is like. So glad to have the opportunity to be on the other side of that now and for a minute and talk through a couple of things. Now, the other question that comes up quite often and what I wanted to get into today is how do I avoid a false breakout or a false breakdown? It's a common question. How do I get confirmation? It always seems to be that if a trader, a technically informed trader, is having questions about something happening, it's how do I get confirmation? And then it becomes a matter of accepting that confirmation. So we're going to talk about a tool today that perhaps traders, trend traders, or even short-term traders could use as a means to provide some confirmation, maybe validation is a better way to put it, of a breakout or a breakdown. And we'll see what that means as we take a look at the ADX indicator today. So before we do that, a couple of quick housekeeping items. Remember that everything we talk about is simply for illustrative and educational purposes only, not a recommendation of any particular security or strategy or account type or tool in the platform or anything else. It is simply for illustrative and educational purposes only. Remember that options carry a high level of risk. They're not suitable for all investors. Make sure you're aware of the characteristics and risks of standardized options. Make sure that you have read that information before considering any option transaction. Additionally, we're going to be using the Thinkorswim desktop software platform today. And we're going to be specifically using the paper money version of that platform. It's for educational purposes only. It's not a guarantee of future success out there in the real world. It's a great learning environment, but there are a couple of points that I wanted to point out. One of those is fill prices in the paper money platform might be a little bit different than you would experience on a live platform. And two, and this is the big one today, the paper money platform does not allow for the use of studies in scans or as a conditional order entry criteria. We're going to talk a little bit about both of those things here potentially. So I want to make sure that you understand the studies will not work in paper money scans or conditional orders, just so that you're aware of that. Also remember, of course, the other things about things like investing involves risk, past performance, no guarantee future results, those types of things. So let's jump into this discussion here. And I'm going to pop over here to the Thinkorswim desktop software platform. And I like Kelly's comment here. Tech analysis pretty good. Getting in front of price movement was my best option for profit that we need to adjust. And I'll tell you what, that's an interesting comment, right? And I appreciate you, Kelly, bringing that to the discussion. Is that, yeah, we do a pretty good job. Many traders do a pretty good job of kind of setting things up. I'll tell you what, if you follow along with Rachel's price patterns webcast, you've got some early ideas about what might be potentially going to happen You talk to Kevin in the mornings on the Trader Talks in Today's Market webcast, and you see how the news might be impacting that order flow throughout the day. Now the question is, well, what strategy do we choose, and those types of things. Lots of different strategies we can employ. But I think also what it comes down to is having a clear understanding of what might be happening with some conviction, right? Because it doesn't necessarily matter what strategy you're using. If you're using a directional strategy and price is moving in a particular direction with some conviction, whatever that directional strategy might be has a greater possibility of being successful. If you're using a non-directional strategy and you're using indicators that may give some reinforcement to the idea that trend might not be moving in a particular direction or in any direction at all, then that can help those neutral directional strategies be successful and increase that probability of success. So I think at the end of the day, that's what it comes down to, is having some confidence in the signals that we're getting. So I just want to kind of put ourselves in a centered perspective here this morning. Well, this morning for some of you, still this morning for me, still this morning for Kevin, and those of you west of the Mountain Time Zone. But taking a look at what's going on here in the S&P 500, we've got a bit of an up day, and it's been a continuation of this pretty strong trend that we've had a couple of fairly minor bull flags in, right? Big rallies up, and then a little bit of a pullback, and then a rally up and a little bit of a pullback, rally up, a little bit of a pullback yesterday. Now we're coming into Friday. Now, to be fair, Fridays can be very volatile, and Friday is not over yet. And Scott says it's 7 a.m. in Hawaii. Yeah, we're going to be there in November, by the way, Scott. Looking forward to that. That's going to be a fun live event out there in Hawaii. A couple of live events. All right, but taking a look at what's going on here, banging on the door from the underside of 7,400 on the S&P 500. So overall market posture. Scott Thompson talked a little bit about this on Wednesday in his Technical Trading for Beginners webcast. Talked about the idea of establishing a market posture. Market posture is still up, even though we're potentially running into some resistance and that possibility of a breakout here. So there are a lot of things that we could look at as an indication of directional price movement, right? So we could put moving averages on here. We could put trend lines on here. That's going to give us direction and kind of a directional perspective. Now that we have the directional idea in place and we've identified a level of potential resistance just from the standpoint that that's a big round number, now we have to see kind of how strong this upward movement is. So there are a lot of different tools that technical traders will use or may use to give us some kind of a momentum indication. So I'm going to choose a couple of those here really quickly, and we'll just kind of take a look. Now, I'm going to use the S&P 500, and then I'm going to pivot to some individual stocks. I'm going to use this as kind of a definitional tool to help us to understand what these are, what these tools are doing and what they're showing us outside of the story of individual stocks, things like earnings announcements and those types of things. So I'm going to pull my little Erlenmeyer flask down here, and I've got a number of these. This is the single grid chart that I use kind of as my sandbox, if you will, to play around with different technical indicators, different types of time frames, different tools. It's the one that I kind of come back to, and I'll share this grid with you once we've finished building some of the tools that we're going to use today. But one of the common tools that you'll see me use, and I use this in the technical analysis live workshop. I use this in my trading futures and index options workshop or webcasts as well, is the RSI, the Relative Strength Index. It's a Wells Wilder creation that's just simply looking at where price is closing relative to highs and lows. And so it gives us kind of a directional momentum perspective. It, like any other mathematically derived indicator, including VWAP, including anything else, including whole moving averages, it's going to lag. There's no way around that unless you massage the data and try to make a projection. And then it's a displacement and then it's not truly leading information. The RSI, like any other mathematically derived technical indicator, is going to lag. This is going to lag by roughly half of its look back period, which is 14 days. You know that this is a Wells Wilder creation because it's got a default period in multiples of 7, 14, 28. Because Wells Wilder, who created this indicator, along with the indicator that we're going to look at later, was an old commodities trader. He was a corn and wheat trader on the some of the early days of the commodities exchanges. And so he learned and used the math around 28-day lunar cycles and saw that futures markets moved in relationship to those 20, specifically commodities, specifically grain futures, moved in relationship to those harvesting cycles that were based on lunar cycles, 28 days. So he took 28, 14, 7 and used those as his default time frames. So here we have a 14 period moving out, or a 14 period look back in this relative strength indicator. That was just a little fun fact. So what I'm noticing here is I put the RSI on the SPX, the S&P 500, is what gives me some confidence in thinking that this is still kind of a bullish market posture is the fact that the RSI, while lagging, yes, is still leading to new higher highs, and it's not diverging as this price continues to move higher. I'm going to argue that this, because of that kind of look back and that little bit of a lag, that we're not really seeing much of a divergence here. In fact, we're seeing some positive movement. High to high, we've got high to new higher high here, and the day's not done. Now, does that guarantee the price is going to break through the 7,400? Absolutely not. But it gives me some confidence in thinking that we've got a bullish market posture here. The momentum indicated by the RSI is definitely moving to the upside and suggesting that there's some oomph behind this move. Now, there are other tools that we use. MACD, moving average convergence divergence, is another mathematically derived indicator that's can be a good momentum indicator. MACD, I know Cameron in many cases has talked through different variants of the MACD here in this particular webcast. So looking at the MACD, I'm just using the histogram, and I'm looking for a positive accumulation of those momentum bars. And I would argue that on the MACD, on the MACD here in terms of divergences, we've got a pretty strong momentum divergence. So we've got disagreement amongst these two indicators. And this is where now many technical traders start to fall into the rabbit hole. Because, well, if one indicator is telling me one thing and another indicator is telling me something else, what do I do? Which indicator do I follow? Maybe I'd better add a third indicator or a fourth indicator or a fifth indicator to break that tie. And then you end up having so many different technical indicators on your chart that you have no way to distill from that information what that concise, articulate signal might be. Because I would argue, even though I've got a positive MACD, looking at high to high, I've got a very strong, if I were to taking this high to this high right here, where we are today, and I were to compare that to what's going on in the MACD, I got a pretty darn strong bearish divergence on that MACD, moving average convergence divergence. But we know that there are other things that move that MACD. But we've got a pretty strong bullish movement, is indicated by the RSI being up in that oversold, or that extreme region up above the 70% mark. So what do we choose? Which one do we use? Wow, by the way, speaking of which do we use, fill in that feedback survey for me if you wouldn't mind. Kevin's going to post that in the chat a couple more times, but take that opportunity to help us to make these webcasts better for you. So I'm going to take both of those off of there, and both of those have their purposes for sure. RSI is a great trending confirmation indicator, as is the MACD. MACD tends to be a little bit slower and a little bit more filtered than the RSI. But you can see that generally those are in concurrence with one another, and typically tend to be concordant indicators. So I'm going to take both of those off, and I'm just going to hide them using the eyeball here. And now I'm going to add another Wells-Wilder indicator here that might be something that kind of fits maybe a middle portion of the bill, because it's not directionally sensitive. In fact, it is directionally, purposely. This portion of this particular indicator and the way that we use it and the way that Wells-Wilder intended it was to specifically, purposely be directionally agnostic, meaning it doesn't matter if the market is moving up or the market is moving down. Both of those two indicators that we just looked at, RSI and MACD, are directionally influenced, if you will. They have directional influences that bleed through. They are adherents to a particular directional dogma, if you will. ADX is completely directionally agnostic. And so what we're going to do is I'm going to put on here my ADX. I'm going to come over to the left-hand side. I'm going to just click on that little question mark there, and we'll talk through the ADX as this loads up. Because ADX is one portion, but it is the core portion of a larger indicator that some traders use, which is the DMI, or Directional Movement Index. And that Directional Movement Index is directionally sensitive, directionally adherent type of indicator, like the MACD, like the RSI. But if we take out the ADX portion of it, we add the ADX to our list here, this is simply a trend strength gauge, regardless of the direction of the trend. So if the trend is moving up, and we can identify that through a moving average or through some other technical indicator, linear regression line, whatever you want to use, the ADX can give us an indication of how strong that trend is now, but it still doesn't give us a prediction of what it's going to do in the future. But here's the presumption. If a stock is moving, if prices are moving in a particular trending direction, but they have weakening or weak trend strength, then they're more susceptible to potential influences to turn it around, to turn that trend around. So running into a level of resistance with weak trend strength may be an indication that you're going to see a bounce to the downside, or bouncing up off of a level of support or finding a level of support with a strong downward trend might be an indication of a breakdown and a support break that might be an exit signal. So we're going to talk through this. So we're going to put on here the ADX. Again, you can tell that it's a Wilder's influenced or created indicator, not only because it says Wilder's on it, but it has that 14,728 theme to it. So Bhaskar asks the question, ADX stands for what? Average Directional Index. Average Directional Index is what that ADX is an acronym for. Because it does incorporate in its calculation the strength of the trend based on an absolute value that gives us that average. So it's going to incorporate average true range, the range in which the stock typically tends, or whatever the price typically tends to move. And again, ATR, also a Wells-Wilder creation as well. So we're going to pop on here the ADX, and it's in the lower panel. And the ADX is an indicator that is specifically bound by ranges. It can go, because it is a ratio, essentially. It is no lower than 0 and no higher than 100. So when we look at it in that context, with 0 and 100, I'm just going to kind of squish this together here to kind of flatten this out. Now, you're not going to see ADX indications down in that lower range. This is just the limitation of how this is displayed on the right-hand chart of the right-hand scale of the Thinkorswim platform. And you're not going to see ADX going above 100, even though you'll see that display of that information up here. So what we can see though in this particular case is the way that this then works. I'm going to put this back to auto, is we have some ranges where ADX becomes important as an indicator. So when we're talking about the default out of the box ADX indicator, 14 period moving or 14 period look back period, then what happens is this 25 level, and I'll just kind of draw that line in here, right here at 25. I'm just using my line tool on the chart. And what I'm going to do, what I often do for this is I'll draw the line in there, I'll right click and I'll edit the properties and I'll just make it an even 25 and display that line a little bit thicker on there. So there's your 25 line. That 25 line is kind of the Rubicon, if you will. Above that 25 line, that is a strong trend, either up or down. Below 25, down to 0, that is a weak trend. In fact, some traders will say that this is a non-existent trend. And if you were to kind of put this on a range, if you were to start to look for an ADX indicator above, say, for instance, the 70 level, then you could argue, and you don't see a lot of trends that do get up into that level, but you start to see a trend that gets up above about the 70 level on the ADX, and that is an extremely strong trend, but it also could be an indication of potential trend exhaustion. So I like to use this 25 line as kind of the line to be crossed here in this particular case. So what I'm noticing at this point is that the ADX indicator, right? No, and Billy, this has nothing to do with volume. Absolutely nothing to do with volume, because we get and that's why I put the S&P on here, the SPX, because this is an index, and this index does not have a volume component to it. This is completely agnostic to volume, nothing to do with volume. This is simply trend strength. This is price movement relative to where it has been before. Is it being pushed one direction or the other? So we take a look at this trend strength line right now for SPX. It's approaching a level of resistance, and the trend strength is right on that line of being a strong trend versus being a weak trend. So I would argue that given the fact that that trend strength is increasing, but it's not really a strong trend yet, it's barely blipped above that 25 line into that strong trend area, that this upward trend running into this resistance 7,400 could potentially be a likely candidate for a bounce back down from that level of resistance. That's the simple takeaway from that we've got a uptrend at a resistance level, low trend strength. Probably not going to break through the resistance unless news comes along and pushes it through. News can change everything. We know that. So that being the case, I would argue that we've got a bullish posture, but it's kind of a moderately bullish posture. It's not necessarily a strong bullish posture. All right, now that's great. Now that we've got the ADX, if we go back here to one of these other time frames, we could argue, hey, look, S&P 500 was trending down, and it was at that strong trend level, right? It was above the 25 level. It was coming down to near a level of support, and it bounced up off of that support, even though the downtrend, because this portion right here, let me grab my magic marker and highlight this. This portion of the trend where price was moving down and that ADX was above the 25 line, that was a strong downtrend. And yet it still bounced up off of a support level. So it's not a guarantee that a breakthrough of a level of support or resistance is going to happen, but it gives us an idea of what we might be looking for. And remember that news changes everything. So we use this as a means to maybe assess the strength of the trend, and it is a confirming indicator, but it is not in and of itself its own trade signal, if you will. We don't simply, in most cases, trade just on an ADX signal. That's why it was incorporated later by Wells Wilder into the DMI indicator, the directional movement indicator, or DMX. So let's do this. Let's look at an individual symbol here that might be giving us a potential entry into a trade, and we'll kind of evaluate this using this same methodology. So let's go to MAR, Marriott. And one of the things that I've noticed here about Marriott, yeah, and it can't. Okay, so Baksha asked, does it work for daily swing trade? The answer is yes. I'll show you how to shorten this up here in just a minute. So I'm going to come back over here to Marriott, and I'm going to put on here my 25 line. So I know where that trend strength is. There's 25 right about there. Okay, there's 25. Yeah, SPX just went over 20 or 7,400. All right, cool. Okay. Yeah, no, that's, I think, kind of a cool perspective. All right, so here's Marriott. It's in an uptrend. It's been pulling back. We've got a little bit of a, whoops, let me take that line off. Let's make this a trend line tool. We've got a bit of a symmetrical triangle here. So possibility of bounce, we'll post the earnings announcement, but the downward trend has been not really strong. In fact, it's been kind of a milquetoast, kind of a weak downward trend. And if we're arguing that below 25 is really kind of a lack of trend strength, then it makes sense that we've kind of got this sideways consolidation or squeeze going on into the apex of the symmetrical triangle. So what I'm looking for in this particular case would be ADX moving above 25 and a breakout above this diagonal trend line. So let's see how we might put this into practical use. Because if that happens, if we get a turnaround in the ADX, and notice that ADX can transit into that strong trend area pretty quickly, above 25 pretty quickly, and can do it on a gap up, it can do it on news, it can also go the other direction pretty quickly as well. So what I'm looking for would be potentially a break out of this symmetrical triangle to the upside. So what I'm going to do is I'm going to draw a line right here, about 364, which might be representative of a breakout of this symmetrical triangle to the upside. That might be what I'm looking for an entry into a bullish trade, because we got a long-term bullish uptrend here. All right. So now what I want to do is I want to put on a conditional order. And then, Barbara, I'm going to come back to your questions here for just a second. So what I'm going to do is I'm going to put on a conditional order. Two circumstances that I want to have happen. And so this is a good if this, then that statement. If price breaks above that or out of that symmetrical triangle, then get into the trade. But I'm going to add to that. If price breaks out of that symmetrical triangle and the ADX is indicating a strong trend, then enter the trade. Otherwise, wait. So what I'm going to do is I'm going to put a conditional order on this. I'm going to come down here and I'm going to right click and I'm going to say buy, but we're going to buy this with a conditional order. So I'm going to enter this or edit this really quickly. So the first condition I have to make is the breakout of the resistance level. So I can do this a couple of different ways. We can do this as a buy stop order, which then triggers a market order, which is fine. Or we could do it as a series of two conditionals. So if we do it as a series of two conditionals, I'll walk you through the steps there. So I'm going to make this a market order. Now, if I were to just send that market order right now, that market order is going to get filled because it's going to fill at the next available price. But I'd have to use a day, time, and force to be able to do that. So what I want to do to take that restriction off is I'm going to come over here to the right-hand side of the order entry line, and there's that little hidden gear icon that pops up. I'm going to click on that gear icon, and that brings up my order rules. So here's my order rule dialog. So the first condition that I want to have met is I want Marriott to mark at or above, so greater than or equal to. Actually, we might even make this greater than and not equal to, because I don't want it to just kiss it and then bounce down. So greater than, we said our resistance was 364. So we're going to say fine. Greater than 364 is our first condition. 364, 00, enter. Okay, that's going to be our first condition. Now we're going to add another condition. And actually, you know what? We do need to do this. Sorry, I didn't even think this through. We need to do this as a, let's do this a different way. I'm going to just take this a different way. We're going to do this as a buy stop at 364, which says stop, wait, don't do anything, just like our conditional was. Don't do anything until the price of the stock gets to 364, then enter the trade. But we're going to add an additional condition to that. And our additional condition is going to be, actually, let's do it this way. There it is. There's our little gear icon. See if we can get it, our order entry rules up here. There we go. So buy stop at 364 and Marriott study, and we're going to edit our studies here, equals a positive 25 ADX indication here. So what I'm going to do is I'm going to add a condition, and the condition is going to be a study. Now, this is where your paper money platform is not going to allow this to happen. Okay. I'm going to go to ADX, and I'm going to say ADX value is greater than or equal to a particular value, and that value is 25. We're going to click on save. Now, I want to make sure that that's all I've got in this technical indicator here. I don't want that simple moving average. I just want ADX is greater than or equal to 25. That's my condition. I want that to be true. So I'm going to create this, and I'm going to say if Marriott study ADX greater than or equal to 25 is true, then fill the order as long as the price of the stock is at above 364. And I'm going to click on save. And now I've got that conditional order in place. So now I'm not going to get into the trade if it just breaks that resistance. I'm only going to get into the trade if it breaks that resistance and the ADX is above 25. That gives me that conditionality of a breakout with a strong trend. So we're using a technical indicator in this particular case to help determine when we're going to get into the trade and articulate when we're going to get into the trade. So I'm going to go ahead and click on confirm and send. We'll read through this order. I'm going to put this in our market movers group and click on send and fire that order off. And that order is going to sit as a waiting order until that circumstance is met. So if you can't articulate, and this is where, again, it's important to make sure that you have clear signals from the technical indicators that you're using. If you can't articulate those signals down into something that you can script into that conditional order, maybe you've got too many technical indicators. Yeah. No, so Ted, this is not so this is a buy stop. And that buy stop says buy it if it's at that price or above. If I were to put it at a buy stop market, a buy stop limit, and then specified a limit, there's a possibility that this order might not get filled. And that would be the case, Ted, if we were using this as a sell stop, for instance, and we were looking for that threshold to happen. But in this case, we're creating a buy stop order, which says don't buy it until that stop price is achieved or better, which is cool because it gives us that opportunity to say, wait, don't do anything until my condition is met. All right. So now, as we start to look at this, let's look at one other example here. And I have another example that I wanted to look at really quickly as a possibility. So this is Let's take a look at this one. Let's take a look at the bearish example here, which is Duke Energy. So DUK, Duke Energy. And here's the scenario, because Duke Energy has been trending up. It's been in kind of this intermediate term descending triangle, kind of squeezing down on this support level. And a lot of traders might just, some traders, I don't know a lot of traders, I know some traders. Some traders might look at this and say, fine, it's broken the support line of that downward trend. I'm going to exit the position at this point. But what I also notice here in this particular case is that it's breaking down without a lot of conviction. In fact, if I were to take my 25 line and put that on my ADX, that 25 line is well up here. So it's got to move a little ways. It's got to get some in order for that condition to be met, for this to be a strong downtrend. Otherwise, it may find a level of support lower and bounce and move higher because the overall trend is still up here. So using this as a conditional filter for a breakdown might be a helpful tool in avoiding getting kicked out on short-term impulse moves. But there's always a risk, because if we were waiting to get out for there to be enough momentum to the downside for this to get to a positive 25 indication on the ADX, then it may very well be that that move has already happened. So what we could do, and I promised this a little bit earlier, is for exiting a trade where maybe we want a little bit faster exit, here's what we might do. We might come up here to the Flask icon. We might come down here to our ADX, and we might adjust this ADX. And so I'm going to make that now 7. So what I found, and what many traders have figured out, and what Wells Wilder himself even suggested, is that if you're changing time frames on a Wilder created technical indicator, change those time frames in multiples of 7 or divisors of 7. So I'm going to take that 14 period look back at time frame, and I'm going to make it a 7 period look back. And now I've got my 7 period Wilders. And let me go ahead and click on apply. You notice how quickly that signal becomes relevant here, because it now starts to give us more rapid signals. But that also introduces the idea of more frequent noise signals or false signals, because you notice we go up to 28, comes back down, goes up to 28 again, comes back down. So this is a scenario where, to filter out some of those false signals, we might do a couple of things. We might keep that level at 25, but some traders, in fact, somewhat counterintuitively, take this back the other direction, and they put in a line down here at the 20 mark. So when shortening the time frame on the ADX, use a shorter or a smaller value for that trend strength gauge. Because if you're trying to capture a quick move, you want that signal to be in force quickly. So I've got a 20 level gauge here. And what I would argue is, when this made that break to the downside, we were already at 20 and above. We're gaining strength in that trend because we've shortened our time frame here. That allows us to get out of this trade a little more quickly. Now, we could have done the same thing here, but it never broke our diagonal trend, or our horizontal trend line. But it's broken this horizontal trend line, and we see an indication that trend strength is increasing. There is still a possibility that price bounces and moves higher, but we've got that confirmation from the shorter period ADX. And you could shorten this down. You could use this 7 period if you were using, say, for instance, an intraday chart as a means to enter or exit trades. So in breakdowns where I want to see maybe a little bit faster signal, I'm going to shorten that ADX down to the divisor of 14 down to 7. And I'm going to shrink my trend strength level down to 20. And so I could do the same thing if I were putting an exit signal on here. I could have right-clicked, created a sell stop, put in a conditional with the ADX condition being at or above 20, and then use that as a means to exit the trade. And that would have been that conditional on the trade. So a number of different ways that we can use this particular technical indicator. Now, I'm going to show you one real quick helpful tool before we go and before I wrap this up. Before we do that, I want to come back up here and I want to talk about this. So go back to Barbara's question. Does the change in direction of ADX line on SPX mean the change of direction even though the absolute number was far above 25? Or did the trend change because of news? So ADX wasn't necessarily invalid. Let's pop back to our SPX real quick. SPX. And we've changed our Wells Wilder here. So when we get that, when we go back to end of March, here's the end of March. Let's change our ADX back to our regular ADX for just a second. Whoops, 14, click on OK, apply and OK. So when we got that change there, was this changed? Was that directional movement changed by news, or was this invalid? Well, news changes, and it doesn't necessarily invalidate the signal, but there was enough news influence on the market because news changes everything that it did, in fact, turn the trend around. And we got that bounce up off of this horizontal support level. So I guess, yeah, in a way, it means that the signal that we were getting from ADX was secondary to the influence that news had on the market. It was still a strong downtrend, but that was overwhelmed by the news that we were happening. Yeah, absolutely. All right. So let's do this. I want to show you another tool real quick. Let's come back to our Marriott tool here, or Marriott screen. So one of the ways that ADX gets incorporated onto the chart is through this tool right here, which is called ADX crossover. An ADX crossover is just simply a way, I'm going to put two of them on here, to point out when that ADX crosses over or below a particular level. So if I click on apply here, and I'm going to change one of these, both of those are above by default. I'm going to change one of those to below. Click on OK and apply and OK. Now I've got arrows painting on my chart showing when that crossover occurs. So when I get a cross above or below. So I'm going to move my line, in this case, down. Let's activate that drawing and let's move that drawing down to, whoops, come on, activate. There we go. We'll move that down to 20. So whenever price moves above that 20 line, I get the purple arrow. When price, or when the ADX moves below the 20 line, I get the blue arrow here. I can use this as a tool. I can use this as a tool to see visually on the chart when that crossover is occurring down here in the ADX. The way that I like to use this is have both of those on there so that I can see at what mode that ADX currently is. Is it above my trend strength line, or is it below my trend strength line? So right now, Marriott is in a weak trend. The last arrow that I have on the chart is blue, indicating that's the color that I'm using here. You can set whatever colors you want, but that's telling me that right now this is in a weak trend state. So I'm looking for both that positive turn. I want ADX above the 20 line or 25 line, depending on what I choose to specify. So that can be a helpful tool that visually reinforces where the ADX is at any particular time. So we've placed a couple of different trade idea and examples here. We've put this tool together. I'm going to pop back out here. Oh, before I do that, I'm going to do this for you really quick. I'm going to save this grid with my single grid, and I'm going to share this grid with you so that you've got it. Remember, anytime we share anything, it is for illustrative and educational purposes only, and it is not guaranteed as to time or accuracy. So Barbara asks, when would I change the ADX to 20 in 7 days? If I were using it for an exit signal, or if I were using it for an intraday type of circumstance, like trading 5-minute candles or 1-hour candles. If I were a long-term trader and I were using this tool to trade something like a 3-year weekly chart, then very likely what I'm going to do to adjust this particular ADX signal is I'm going to come down to the ADX. I'm going to adjust this, and I'm going to make it not 14, but 28 days. Click on OK and apply and OK. And then I might take that line and move it up to the 30 level. So let's make that automatic again. And now I might take that line and I might have to squish this down a little bit to get to 30. So I might put my horizontal line at 30 and have 30 be the threshold for an entry into a trade, because that indicates a strong trend over a longer period of time. So if you're going to decrease the look back period, decrease the level of the crossover line. If you're going to increase the look back period, increase the level of the crossover line. Guys, thanks very much for joining me. I know we talked about a lot of stuff here. Remember to click on subscribe and like, and check out the Trader Talks webcast page for more information about technical indicators. Thanks, Kevin, for being here. My thanks to our producers. We'll see you soon. Take care, everybody. Bye-bye.